Hi, everyone. Thank you so much for joining us today. My name is Soka Yus. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. If you're joining us at home, wherever you're at, thank you so much for joining us today and in here live as well. Again, my name is Soka Yus. I'll go ahead and have my contact information up here in a little bit. So at any time during the presentation, if you have any questions or you want me to elaborate a little bit more on what we're talking about, just type it into the, this chat box on YouTube if you're watching us on YouTube, or just go ahead and interrupt me here, and then I can elaborate a little bit more. But I'll go ahead and put my contact information up here. And if you have personal questions, just go ahead and reach out to me via by telephone or by email as well. Like I said, I'm a financial wellness counselor here. I've been at this position for 3 years, but I've been in the collection industry for 16 years. So personal finance is a passion of mine, and it's really something that I feel like a lot of people should talk more about what's going on with your relationship with your money. I really encourage people to talk about to be open about your debt or your personal finances with your family and friends, so that way we can remove that stigma about talking about money, within family and friends and stuff. So if you have any personal questions, like I said, please reach out to me by email or by telephone. But today we're going to talk about financial wellness. So on the agenda today, we're going to touch base on budgeting, savings, managing your debt, retirement financial planning, managing your money, and watching out for scams, okay? So first things first, we're going to talk about budgeting. So we want to start building healthy habits when it comes to budgeting, set financial goals, and we have to learn about setting budgets. So something that I really want to a lot of people to understand is when we say the word budget, I don't want you to think it's a restriction on your money, on your lifestyle, or anything like that. Look at it as a way of it's freedom for you to know how much you can spend in which category of your life. For example, you want to take a trip in Europe in July, but you've been eating out a lot. So if you're able to put a budget on, your eating out category, then you'll be able to save more for your European trip. So it's more of a freedom of what you're able to live, how you're able to live your life, and when you're able to achieve those life goals or financial goals as well. So as part of having a healthy habits when it comes to budgeting, we want you to establish and understand your credit, how important credit is for your financial life currently and in the future. We want you to start making all your payments on time. The things that are being reported to the credit bureaus, so such as your mortgage, if you have that, your car payments, all your credit cards, any loans that you may have. We want you to make all your payments on time. We want you to start building savings as well, so we'll go ahead and get into details about that. Also set financial goals. It's really important that you set your short-term goals, medium-term goals, or even long-term goals. So short-term goals will be something like if you want to, like I said, save for your European trip in July. So between now and July is in 5 months, so that would be considered a short-term goal. A medium-term goal would be about a year, 2 years. You want to save for a new car. You want to save $15,000 for a down payment on a new car. You want to get that by, let's say, December of next year. So that's going to be considered a medium-term goal. A long-term goal would be, in 5 years, I want to have $50,000 saved for a down payment on a mortgage. So that's going to be a little bit longer term. And of course, our long-term goal would be like retirement. How much you want to save or put away for retirement, what you want your lifestyle to look like once you retire, then you'll, of course, work your way backwards and see how much you need to save between now and your retirement. And we want you to set a budget and stick with it. So we want to be realistic with our budget, and we want to have a budget for our short-term financial goals, medium-term financial goals, and long-term financial goals as well. And we want to have due dates on those financial goals, so that way we know how much time we have. So it's really, really important that when you do set a budget, that you keep track of your spending habits and your daily expenses, and also some of your quarterly or annual expenses as well. Some people really like to pay their car insurance every 6 months or every year. You get a discount by doing that. So you can also just add those expenses on an annual basis or for every 6 months. Or, some people, if you have you pay for trash like every quarter. So every 3 months you pay for trash, or every 3 months you pay for, like Polish lessons or whatever the situation may be. So you want to go ahead and put that in your budget spreadsheet as well, which we'll go over here in just a little bit. You want to start and continue building emergency expenses. So ideally, we want you to have between 6 to 9 months of emergency savings, but you can always start out with 1 month of emergency savings. Let's say if your total expenses comes out to $3,500 a month, we want you to have at least $3,500 a month in your savings account. You put that in a high yield savings account so your money can work for you and get some money back. The easiest way to start savings, to start building your savings, is to go and automate each a certain amount out of each paycheck. So do it like a payroll deduction and deposit into a specific savings account, so that way you know you won't touch it. So when it comes to budgeting, where do you want to start? So you want to go ahead and create a list of all your monthly expenses. So in the green section here, you'll see that it's an income section. So this demo doesn't belong to anyone. It's just a sample that I typically see. So you want to go ahead and put all your income in one section. So whether it's your income, your partner, or if you guys have multiple jobs, you can put all your income there and have a total monthly income. So this is only the amount that's deposited into your checking account, not a gross monthly income, but your net monthly income. Okay, so what's deposited into your checking account. Then you want to go ahead and set up your write down your fixed monthly expenses. Your fixed expenses would be like your mortgage payment or your rent, your student loans, your cell phone, your car payment, your credit card minimums, streaming services, internet, things like that, your car payment. Those are considered your fixed expenses. It's going to be a fixed date, a fixed amount each month. And I like to categorize that by due dates, so that way you know which bill is due on your next payday and things like that. In the yellow section, you can write down your monthly variable expenses. Those things are like groceries and dining out, hobbies and entertainment and stuff that changes, with the season or with the school year. So for example, in September, the hobbies and entertainment might not be as expensive as a category for, clothes for back to school shopping, things like that. But we would like to have your variable expenses as part of fixed expense as well, because if we want to stay within budget, we want to go ahead and set up an amount for your grocery bill for, let's say, $500 a month or $800 a month. We want you to stick to that amount as best as possible. We know that it's going to change a little bit from, week to week or bi-weekly or bi-monthly. So depending on how often you shop and stuff, but you want to be able to stick to a budget amount for that as well. I also like to have members put in their financial goals. So example, if they're trying to save for emergency savings or Christmas savings or getting new tires, I want them to put that in the category where have it mandatory to where it looks like it's another bill. So that way you know for sure that you're going to set money aside for these financial goals. So this is what just a basic budget spreadsheet looks like. You want to list your savings goal. You want to automate your savings as often as possible. You want to have multiple savings accounts for different savings category. And you want to save towards your financial goal with a due date. So just be very, intentional with where you're putting your money. If you need a spreadsheet for just this very basic spreadsheet, you can email me and I can send you a very basic one. I'll just have these things on there. You can delete it. It doesn't belong to anyone. But at least it's, you can just have a section where you can have your income minus your expenses and what's left over for your financial goals and stuff. So the ideas, we want to have ways for you to reduce your expenses as well. So once you start auditing your own accounts, once you start setting up your budget, you want to be able to reduce some of the expenses. So it's a good time for you to really review some of those automatic payments that are going out. Do you still really need to get a subscription to ButcherBox, or a subscription to Fabletics if you're not, using this stuff each month. So it's a really good idea to audit your accounts and try to figure out where you can cut some expenses so you can use some of that extra money towards your financial goals or savings goals. So some of the ideas that we have that help you reduce expenses: you can change your cell phone plans or providers. You can change your data plans or join with other family members for family discounts. So there's there's so many different services out there where it's really, really good for you as a consumer because a lot of those merchants are competing for your business. So there's always good deals out there. I know Mint Mobile, you can start out with $15 or $20 a month for the first 6 months. So if you're looking to cut out your T-Mobile bill of $150 a month when it's just you, you're looking for something cheaper, you might want to explore Spectrum or Mint Mobile. You know, just do a little bit of research. There's always a lot of different great promotional services out there with different phone services company. You know, with the summer coming up, a lot of people like to be outside. So maybe cancel your gym membership or just put a pause on your gym membership. If you're spending $150 a month at the rack, but you know that you're going to be outside more often during the summertime with gardening or walking your dog at the park, wherever it may be, just go ahead and, you know, postpone those payments or just pause the payment or cancel it altogether until, you know, until the winter time when you start working out at the gym again. Or if you know that you're not going to the rack that often and it's expensive, you can actually just switch your gym membership to something much, much cheaper, like Planet Fitness. You can get a monthly membership for like $10, or even if you do the black card, I think it's like $22 with taxes and everything. There's a lot of discounts also through your health insurance. So your health insurance, you can be part of a program where if you go to your gym, let's say like 20 days out of the month, then it's enough for your health insurance for that, you know, healthy program to pay for your gym membership. So you might want to look into that as well. That's part of your EAP or Employee Assistance Program, or through your medical health insurance through your employer. So it's something to look into. Another thing that you can do to cut out your expenses, you can cut streaming services or consider different internet providers as well. So if, you know, football season's over and, you know, you ordered Hulu Live Sport for $85 a month for the last few months, you don't really need that anymore. Just go ahead and cut it out too, so that we can save some money. So review your, like I said, automatic withdrawals and payments, just to see if you really need all those services anymore. And again, with internet providers, they're always doing promotional stuff, so see if you can reach out to your internet provider and see if they're able to put you on some sort of promotional program to make your payments cheaper. So for another way that people can cut expenses, a lot of people don't really think of this, but it's there are a lot of banks and stuff out there or other institutions that charge you monthly service fee for having a checking account or savings account with them. You might want to consider moving it to a different bank or different credit union that doesn't charge you those monthly fees. For example, we don't have any monthly fees with our checking and savings account, our money market account, or our CDs and stuff. So it'll save you, you know, the little pesky $15 a month that they're charging you, or $8 a month. That's something that you can save and put towards your financial goals. And also, if your credit is a lot better now, let's say if you took out a car loan or took out a loan a couple years ago when your credit wasn't as good, but it's a lot better now. What you can do is you can refinance your loans for a much lower interest rate, so that way your monthly payments will be a lot lower. So with lower monthly payments, better credit equals better interest rate equals better lower monthly payments, and that means that you can save more money too. So the less you have to pay towards the loans, the more money that's going to stay in your pocket, or you can put it towards other financial goals. So you want to tailor your current goals to the lifestyle you have now and the life you want to live, you know, in a few months or in a couple years or in 5 or in 30 or 40 years when you retire. So when it comes to budgeting, it's not a restriction, just look at it as a freedom as to when you'll be able to afford certain things. So it really helps you to really discipline yourself and be more conscious of where you're putting your money. So you want to be sure that you're intentionally saving your money, that you are spending your money intentionally, knowing that you have goals to reach by a certain date. So it really is a different form of freedom when it comes to that mind shift of thinking. So when it comes to savings, first things first, we want you to have an emergency savings. Why is that important? Because if something happens, your tire blows out, then we don't want you to put it on your credit card. It puts you further into debt. So instead, you would use that emergency savings for that kind of emergency, and that way you can stay out of debt and not really use your credit card. So it's important to avoid adding debt if you're trying to get out of debt. You want to set goals and automate savings from your paycheck. That's the easiest easiest way to save something is have a payroll deduction and have it automatically deposited into a savings account, whether it be your same bank or same credit union, or to a different bank or a different credit union. The goal is to eliminate you as the middleman, because if everything is deposited into your checking account and your goal is to manually move it to a different savings account, you as the middleman might be tempted to use that money for whatever sales going on, whatever event that's happening in your life, and keep telling yourself, you know what, I'm just going to go ahead and use this money that I'm supposed to put into this savings account for this event happening this weekend. And then I'll just start saving next payday. And then next payday comes and there's a different event or different situation. And then you keep telling yourself next payday and next payday. Next thing you know, a year's gone by and you haven't really contributed towards your emergency savings. And your tire ends up blowing up, then you end up putting, that expense on your credit card, and you're getting yourself further into debt. So it's really, really important that you're intentional with your money. Again, where you're putting that, where you want to invest it, how you want to spend it, and how quickly you want to reach your financial goals. So again, preferably have 6 to 9 months of living expenses saved in your savings account. You can put it in a high yield savings account, money market account. And for short-term savings, you want to determine the amount that you want to save, and then have a due date. Let's set the goals for that due date. So for example, things like car down payments or moving expenses. Say I want to move to Florida by December. How much do I need to save? What is the total amount for me to move to Florida in December? And how much time do I have? So then you'll start working your way backwards, and then start saving your money that way. Long-term savings, you determine the amount and set your goals with a due date, of course, such as house down payment or investments in retirement. So if you don't know, if you think if you're in your 20s and retirement seems so far away, but that'd be the best time for you to start investing is when you're in your 20s, so that way you have more time for compound interest to take place. If you don't know how much is saved, you don't know what you want your life to look like, you might want to, chat with an advisor. So there's, I believe with Mayo, there you can talk to, you can call your HR and see who your investment or retirement advisors are. You can reach out to them and see if they can help you work towards that long-term goal, okay? When it comes to savings ideas to accumulate more savings, of course, we want you to set goals. So the more goals you have, the more intentional you're going to be to save, to put towards that goal. It could be a financial goal or habitual goals as well. You can automate your savings. That's the easiest way. Eating out, groceries and stuff is a large bill for a lot of families. So perhaps meal planning is the easiest way to cut down that expense. So you know exactly how much you're going to spend per meal or per day, per week, if you know what you're going to be making for that week, what's on the menu for that week. So dine out less. But if you're if you're a single person and you like to go eat out and stuff, then you know what, just have your budget to match that lifestyle that you currently want. If you know you want to spend $500 a month on eating out, but you don't really want to cook at all, so don't pressure yourself to spend money on groceries if you know you're not going to cook and all that food's going to go bad. So you might as well just go ahead and allocate your budget more towards eating out and a lot less for groceries. Whatever your lifestyle is now, or however you want to live your lifestyle now, you cater your budget to that lifestyle, okay? If you're able to, carpool. Carpool is, the easiest way to save money on gas, on wear and tear on your vehicle. You can avoid extra trips as well. Like if you live outside of Rochester, you're coming into town to grocery shop, and just have a list of things that you know that you're going to do here in Rochester, instead of wasting extra trips driving back and forth, putting extra, taking up extra gas or extra wear and tear on your vehicle. Another ways to make money, you can sell items that you no longer need or use, such as your own clothes, baby gear, household items. You can go to Facebook Marketplace, Mercari, Poshmark, Craigslist, so many different websites and apps that you can sell your items on. And if you have enough time, or if you're able to, then get a part-time job or pick up extra shifts at your job. Pick up an extra gig. It's a gig economy, so it's easy for you to kind of download DoorDash and then start dashing food that same night or the next day. So if you're looking for ways to save money, this would be have extra savings. these are some of the ideas that we have. And then different services and accounts, again, that we have available here at MEFCU, at Mayo Employees Federal Credit Union, to help you achieve those savings goals. We do have high yield savings accounts. We have CDs. We have youth and teen CDs. So, with the summer coming up here in a few months, if your child is getting their first job, you can open up, have them deposit that money into a CD, or they can open up a savings account under your name with you as a joint member as well, so that we can teach them how to save money. Educational, so Roth IRAs, traditional Roth IRAs, we have it available here as well. The educational savings would be the 529 plan that we have available here. There's pre-tax savings and pensions that you can talk about when you meet with an advisor as well. So next we're going to talk about managing debt. Your credit profile is specific to you. So you need to know how your credit score is calculated. That's really important as well. It's going to be different for every single person. There's a percentage amount that's the credit company goes by, the credit bureau uses, but it's going to be different for every person with different models or different products that you're trying to apply for as well. You want to make thoughtful and deliberate choices when you use your credit cards. So if you know for sure that you can't afford to pay off the entire Gucci purse that you're going to buy, let's not put it on a credit card with a high interest on it. Just go ahead and save that money and have it, a short-term goal, and not use your credit card to pay for something like that. So you want to be thoughtful and deliberate with your choices. You want to monitor your credit report at least once a year. You can visit annualcreditreport.com or call this phone number to obtain a free credit report. So on that credit report, you're going to get all three of them. You're going to get the Experian credit report, Equifax credit report, and TransUnion credit report. It's really important that you review all three. They're going to be in different formats because they're three different separate, completely different companies. So it's really important for you to see if your name, your address, your phone number, all your information on TransUnion is correct, all your information on Experian is correct, and Equifax is correct. And sometimes, it might be correct on two and incorrect on a third one, so then you might want to go ahead and dispute or, have submit some information for them to update that information, make sure everything is correct on there, make sure there's no fraudulent activities on your credit report. If there is, you can submit a dispute. If you need help with that, you can reach out to me and we can go over that together. But it's really important that you make sure that everything on your credit report is accurate, that there's no fraudulent activities and things on there. So how is your credit score calculated? So the biggest thing is 35% of your credit score is calculated by your payment history. Just like with when you're trying to get, car insurance, they look at your driving history, right? So 35% of your credit score is based off of payment history. We want to make your payments on time. You want to continue to make your payments on time. And if you don't think you can make your payments on time, you can reach out to your creditors, let them know that you're going through some sort of financial hardship, and see if they can defer your payments, or see if they can set you up on some sort of payment plan in order for them not to report your payments delinquent. 30% of your credit score is calculated by amounts owed, so your credit utilization. How much of your available credit are you using? So for example, you have a few credit cards, the available credit is $10,000, but you've spent $6,000 of that $10,000. That'll be 60% credit utilization. So you owe $6,000. Typically, they want you to stay under 30 or 40% credit utilization because it shows that you have discipline not to use the rest of that money. So the less you owe, the better your credit score. If you have the ability to pay off your entire balance on your credit, on your credit card statement, by all means do so. That's always the best bet to go. But if you can't do that, if you find that you got yourself in a little sticky situation, at least work your way towards trying to get under 30 to 40% utilization, okay? 10% of your credit score is based off of new credit. So new credit is, if you're trying to get loans, trying to get credit cards, it's going to show up on your credit report as a hard inquiry. So you're trying to apply for a credit card with Citibank. Citibank then pulls up your credit report. It's considered a hard inquiry because they're trying to get your credit score and have all the information on your credit report. So then it lowers your credit score by a few points for a few months. It'll bounce back up within a few months. So the more things that you apply for, the more hard increase shows up on your credit report, so then it lowers your credit score. 15% of your credit score is based off of length of credit history. So you want the oldest credit card, the oldest loan, whatever it is. You want a really long-standing credit history. So if you open up a credit card when you're 18, you're now 40 years old, you have 22 years of credit history. But if you just got a new credit card this year, now it's now the average credit history is 11 years. So you want to keep that average credit history as long as possible. So you want to not really try to get new credit cards unless you absolutely have to, or new loans unless you absolutely have to. So be very, very mindful and be thoughtful when you're trying to get a new credit card or new line started. 10% of your credit score is your credit mix. So if you have a couple credit cards, your mortgage, your car payment, your student loans, a personal loan, that's a good credit mix. But do not go out there and open up those items, those products, if you do not need those things. It only takes up 10% of your credit score. The thing that you want to focus on here is making your payments on time, making sure you don't go over your credit utilization, making sure you don't really, get new credit, and keep the length of your credit history as long as possible. And making your payments on time, of course, so you want to pay your bills on time, but if you miss a payment, you want to get current and stay current for as long as possible. But if you can't pay your bills on time, again, contact your creditors. Don't wait until it's too late and contact them early. Just let them know, you know what, I can't pay this entire $2,000 balance on my, the minimum payments this month, but I can pay half of it with this paycheck and pay half of it next paycheck. At least present this information to them and let them know in advance what kind of help you may need from them. And new credit, you want to limit new inquiries, apply for and open new credit accounts only as needed. You want to have credit cards, but manage them responsibly, okay? So closing old accounts doesn't make it go away just because you close your credit cards, but you may have a balance on there. You just want to make sure that you contact the creditor, let them know that, I'm going to close this out, but I want to make sure there's zero balance on here. If there is a small remaining balance because of the interest, then just go ahead and pay it off. But just make sure that, that the account is closed out completely. That's why we want you to review your credit report as well. You think that you closed out that Bank of America credit card 4 years ago, but it somehow showed that you owed $60. Now that $60 is with a collection agency or it's been written off, but it's on your credit report. So it's one of those things that, even though you closed out your credit cards or whatever loans that you were paying back, but you want to make sure that everything is paid off, closed out. You have a letter stating that everything is paid off in full. So that's your proof then. So managing credit, the length of credit history, the age of your oldest account, and average age of all accounts. So you don't want to apply for unnecessary credit accounts because then it shortens the average age of your credit history. You want to use caution when opening new credit cards to transfer balances as well. And avoid payday lenders at all costs. So I believe it's illegal in like 15 states, so payday lenders charge a lot in interest rate. If you find yourself looking at payday lenders, please reach out to us before you apply to them. Let us know, so that way you can talk to me and see what other options we have available for you, so I can help you explore what other options. It's a vicious cycle. It's a hard cycle to get out of once you start applying for payday loans. And also like Klarna, places like Klarna, like buy now, pay later places. When it comes to student loans, you want to understand what types of student loans you have. You want to understand what kind of repayment program that you're set up on. You want to learn about the Public Service Loan Forgiveness Program, which is available here at Mayo, and also understand the SAVE program. So I know things are constantly changing with student loans, but if you have some questions on your personal student loans, you can reach out to me personally. We're not going to really generalize, the student loan stuff right now until we get more information on what's going on with the SAVE program. And you want to prepare for repayments. I know it's really, really hard for a lot of families right now, having to pay a large student loan repayments and then large rent payments or mortgage payment and stuff. So, but if you find yourself that you're having a hard time keeping up with your bills, please reach out to me. We can sit down, we can take a look at your expenses and your finances together and explore different avenues and how we can help you save money and perhaps help you apply for the SAVE program if that's what you need help with. So good debt versus bad debt. We want, your mortgage, you could possibly get equity. Chances are it's good when you get equity on your mortgage. Right now, chances are if you have a mortgage, you're building equity on it. Your education is always good because you're investing in yourself too. Store credit's not always the best because of the high interest rate on there. Vehicle loans, just pay that off as quickly as possible. If you have a very low interest rate, then that's really good. If you have a higher interest rate, then we want to put that as one of the top things for you. One of the top debt that we want you to pay off as quickly as possible. Credit cards, if the interest rate's high, then go ahead and work on paying that off as quickly as possible. There's some credit cards with very, very low interest rate or 0% interest rate. So it's always good to have a zero balance on those as well. Cash advance is always bad, so that's considered bad debt. Business debt, is it good or bad? Depends on what kind of business you're going into, how well your business is doing. And investments, it's always good because the market's going to go up and down, but it's always good to start investing. But you do not want to take out a loan or, use a credit card to invest on things. So retirement and financial planning. Before you start financial planning, you want to talk about paying off your debt first. So if your debt is, did your hand go up? I'm sorry. Oh, okay, sorry. So before you meet with a financial planner about your retirement, things like that, we want you to have your debt paid off first for the most part. So for example, if you have some credit cards with high interest rate, on there, we want you to go ahead and pay that off first before talking about retirement. But we don't want you to think that you can't talk to someone about retirement first. Just kind of have an idea of the flow of, when to start saving for retirement. Should you pay off your high interest debt first, or should you start, saving for retirement? College savings, if you have kids, it's always the earlier the better. Life insurance, if things plan a change in your life now, you had a baby, do you need to readjust your life insurance? Do you need to increase the amounts? Something to look into. Estate planning and trust is always really good to have as well. And long-term care, you may be in your 20s and 30s, 40s now, you don't want to think about long-term care. But if you have access to HSA card, your health savings account with Mayo and here at MEFCU as well, it's always best to invest in that too for your long-term care later on. So that's something for you to talk to your advisor about as well. Retirement planning, You want to identify your retirement goals and desired lifestyle. So what does that look like for you? Do you want to travel the world when you retire, or do you just want to go live in a tiny home on a land that you bought in Alaska and not go anywhere and say bye to civilization when you retire? What does that look like to you? And what is it going to cost for you to get to that lifestyle? So if you want to travel the world, of course, it's going to cost more. If you just want to go live off your land in Alaska, then that's going to cost you a lot less. So identify your retirement goals. Of course, it's going to change between your 20s, 30s, and 40s, what you want it to look like. And you want to adjust your financial planning according to those changes as well. You want to contribute to your employer sponsor plans. So talk to your advisor about that. What is a good percentage for you to invest in? You want to contribute, do you need to open a traditional or Roth IRA? What kind of options you have available? You want to understand your government benefits. So that's like your Social Security income, your Medicare. What are some of the benefits with that? When are you eligible? How much will you get if you retire today or apply for disability? So your advisor will be able to help you with all that. And you want to start saving for retirement as early as possible. So an example would be the benefit of investing early. So if you want to hit $1 million by age 65, assuming the annual rates of return compounded monthly is at 10%, if you started saving $60 when you're 15 years old, your total investment of $36,000 will get you to $1 million by 65 years old. But if you wait 10 years later, you would have, in order for you to hit $1 million by the time you're 65, you would have to invest monthly $160 for a total investment of $77,000. But if you're waiting until 35 years old for you to start investing and your goal is to hit $1 million by 65 years old, you would have to pay $440 or invest $440 per month in order for you to hit that goal by age 65. The total investment for that would be $158,000. So at 45 years old, your total investment monthly would be $1,310 in order for you to reach $1 million by 65 years old. Your total investment would be $314,000. And then if you wait till 55 to start, monthly investment to hit $1 million by 65 would be $4,850 for a total investment of $582,000. So yes, if you think that, you know what, I'm 25, I'm just getting my first, adult job, and I really want to enjoy life, I want to travel, things like that. But so I don't want to think about retirement, but I think it'd be a great time for you to do that because you have time on your hand. You'll be, your money will be able to accumulate a lot faster with compound interest. So managing your money, when it comes to keeping tabs on your money, what we have, some of the services we have available at Mayo Employee Federal Credit Union for our members to help you keep tabs on your money would be online banking, mobile deposit, which is really convenient. You just take a picture of your check, front and back copy of it, and it just get deposited into your account. Your funds will be available. You have auto bill pay, which is of no charge to you. Digital wallets such as Apple, Google, Samsung, Garmin Pay. A Zelle person-to-person transfer, internal, external transfers. We have e-statements. You can open accounts and apply for loans online. So you can have multiple savings accounts, multiple checking accounts as well without any fees on it. You can have customized alerts to monitor your account. So if something, if you alert us, let us know that, if something is popping up for Amazon, then we'll be able to alert you for that, if there's a charge in Amazon. So watching for scams, don't let anyone scam you out of your hard-earned money. So we have a great presentation here given by Stephanie, who's our fraud examiner. And that should be coming up soon here. So just go to our website and take a look and see when the next presentation will be from Stephanie. She talks, and she goes into details about different scams to look out for. So just to give you just a very basic information, back in 2021, $5.8 billion were lost in scam fraud, lost to fraud. So that's a 70% increase from 2020. And it's impacted over 2.8 million consumers. So when you go to your credit report, it's really important that you review that just to make sure that everything on there is accurate, that it's not fraudulent activities on there. And if you think that you're a victim of fraud, please reach out to us so we know how to help you. Freeze your accounts, freeze your credit report, or freeze your social security number if you need to. Some of the common scams are phishing scams. Those are, phishing alerts like on your email and stuff. If you don't recognize this person that sends you this email, there's no need for you to open it. I mean, if they're offering, if you know that the title is spelled completely wrong and the grammar just doesn't sound right to you, then let's not open it because the chances are that it's phishing scams. Gift card scams, in-store and online, person-to-person scam as well. It could arrive via text, email, phone, websites, and other methods. So if you think you've been a victim of scams, let us know. But the good rule of thumb is if it's too good to be true, chances are it's too good. It's not true. You have that little intuition kicking in saying, you know what, something just feels off about this whole situation, then trust it. Chances are you probably are getting scammed, or you can be, part of fraudulent ring. You don't want to be part of that. But if you think you're a victim, or if you think you need help budgeting, if you need help going over your credit report, anything about any of the stuff that we covered today, you can reach out to me. We can schedule an appointment to meet with me face-to-face. We can do Zoom or Teams, so we can do over the phone as well. So again, my name is Soka Yus. I'm a financial wellness counselor here. My phone number is up here. My email address is up here. But if you can't write it down now, you can go to our website at mayocreditunion.org, and my information will be out there as well. And you can reach out to me or reach out to the phone center, and they can transfer you to me. So it doesn't look like we have any questions in our live chat at this time. So I'll go ahead and end it here. But if you have anything else that you can think of, any suggestions, please reach out to us as well. And thank you so much for joining us today here while we talk about financial wellness at Mayo Employee Federal Credit Union. Have a wonderful day.